Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets hidden in plain sight. With this filing from Smith Micro Software, get ready for a behind the scenes look at how they're trying to keep their financial engines running. Today we're diving into a filing from Smith Micro Software, a company that provides wireless connectivity and location-aware services. They've just announced a significant financial move, a registered direct offering. This means they've sold a little over 1.6 million shares of their common stock to a bunch of institutional and accredited investors. They offered these shares at 93 cents a piece. This was a way for them to raise money relatively quickly by tapping into an existing registration statement they had on file with the SEC. But it doesn't stop there. As part of the deal, they also sold what are called unregistered warrants to buy more stock. These warrants come with an exercise price of 120 cents per share and are good for 5 years. Now, these warrants have some interesting clauses like anti-dilution protection. This basically means if Smith Micro decides to sell more stock at a price lower than the warrant exercise price, the warrants terms adjust to protect the warrant holders. They also have protections against things like reverse stock splits, which can sometimes be used to make a company's stock price artificially higher without changing its fundamental value in a way that would hurt warrant holders. And here's where it gets tricky. The ability to actually use these warrants is tied to getting shareholder approval. Specifically, they need approval if the total number of shares issued through this offering and the private placement goes over 99% of their outstanding shares. This is often a requirement to comply with stock exchange rules like those of Nasdaq. Smith Micro has committed to seeking this approval by October 17th. Now, it's important to note that these warrants and the shares they represent haven't been registered under the main securities law. They're being sold under legal exemptions designed for transactions that aren't publicly offered and are sold to sophisticated investors. So, how much money are we talking about here? Before expenses, this whole deal brought in about $1.5 million. The company plans to use this money for day-to-day operations and general business needs. The deal officially closed on July 18th. As part of this agreement, Smith Micro has promised not to issue any new stock or similar securities for a period of 75 days after the deal closes, or until they get that shareholder approval for the share issuance, whichever is later. They are also staying away from what's called a variable rate transaction for 5 months, which generally means avoiding issuances that could lead to dilution based on fluctuating prices. Looking ahead, Smith Micro has also agreed to file a registration statement within 60 days to allow the resale of the shares that will be issued when these warrants are eventually exercised. This registration statement needs to be approved by the SEC no later than 120 days after the closing of the offering. They also brought in Chardan Capital Markets to help with this offering, and they're paying them a fee of 6.5% of the total money raised. That's a pretty standard fee for this type of financial advisory work. This filing also includes the actual form of the common warrant, which lays out all the detailed terms and conditions, and an opinion from their lawyers at Buchanan Ingersoll and Rooney PC. The information about these warrants and the shares being sold without full registration is also being highlighted in a separate section dealing with unregistered sales of equity securities. This just reinforces the fact that these particular shares are being sold to a select group of investors under specific exemptions from the usual registration process. The company also put out a press release on July 17th announcing this offering, and then another one on July 18th confirming that the offering was completed. Now, like many filings, this report contains forward-looking statements. These are basically statements about what the company expects or hopes to happen in the future. They use words like anticipate, believe, and expect. It's important to remember these are projections and can be influenced by many risks and uncertainties. The company is saying that actual results could be different from what they're projecting. They also state they don't have an obligation to update these forward-looking statements if things change, unless required by law. Here we see a list of exhibits attached to this filing. These include the actual warrant agreement, the legal opinion, the form of the purchase agreement, and importantly, the press releases they issued to announce these events. Now, looking at Smith Micro Software, this is clearly a company that needs to access capital to fund its operations and growth. Raising $1.5 million through a stock and warrant offering is a move to bring in cash. The fact that they had to do a registered direct offering and use warrants suggests they might not have been able to raise funds through other, perhaps more favorable means at this particular moment. The anti-dilution clauses on the warrants and the need for shareholder approval for significant share issuances signal potential concerns about future dilution for existing shareholders if the stock price doesn't perform well. The company is essentially saying, we need cash, we're getting it from investors who are getting some protections in return. The 75-day lockup on new issuances is to maintain stability and prevent immediate dilution after this offering. The key for investors will be to watch if they can secure that crucial shareholder approval by their October deadline. Without it, the full impact of the warrant exercise might be limited, or they might face further complications. It's positive their torrential shareholder approval by their October deadline. Without it, the full impact of the warrant exercise might be limited, or they might face further. What are your thoughts on Smith Micro's recent financing move? Do you think this strategy will pay off for them? Let me know in the comments below. If you found this breakdown helpful, give this video a thumbs up and subscribe for more in-depth corporate analysis. Don't forget to join our Discord community to continue the conversation. Thanks for watching, and I'll see you in the next one.